What about the sectors here? Let's talk a little bit about that while we're going into this, because it's not like the entire market is selling.
Right.
Energy
Oh,
is up big, another 3.5% here on the backs of a pretty good move out of crude oil and some positive sentiment there. Matt, what are you seeing across the sectors that's grabbing your attention?
well, again, it feels a little bit worse than it really is right now. And anytime the market's going to test support, nobody loves those moments in time, guys. Like literally anybody. Anybody love triple test support bounces in the stock market?
No.
Like anybody?
Nope.
Like nobody likes those, right? You like one test of support because it gives you a great buying opportunity. You like the second test of the support because if you miss the first one, you're like, yeah, it gives me a little bit of reprieve and lets me do it again. The third one, you're like, why is this not going up?
Yep.
Right? What is going on to not have my asset class going up? And so nobody likes multiple levels of support, but you're going to still bet on support until support fails. That's number one. Number two, the market feels a little worse because of what's happening in tech. Tech gets so much love in social media. Tech gets so much love in the conversation space. And tech's been up big in the last year, guys. And there's some rollover here. I do believe this is more sector rotation than broad market mechanics here. You're still seeing that, the movement that we've been talking about in recent history, but really the theme that we've been detailing since the election play out here. And you're seeing rotation. That's my opinion. I don't think you're seeing the entire stock market roll over and trigger some event to where we're going to be talking about the market down 20%. Maybe that's in the cards, maybe it's not. But I have a hard time seeing that when the cyclical areas of the market are doing so well from a trending and a pattern perspective. When the entire market is rolling over, that's one thing. When you see cyclical areas of the market like finance, basic materials, when you see it in industrials, when you see it in energy, that's hard to say the entire stock market's going to roll over, but the economy and those areas of the marketplace that are really tied to the economy are going to do really, really well. So that is hard for me. That's a hard nut for me to crack there. And so let's take a look at energy for a second here today.
Can I say one thing on tech real quick, man?
Go ahead, Ty.
At today's lows, this is a 10%. It's 9.8. So
it's in correction territory.
Yeah, so this is a 10% correction. And historically, you get these about one time a year on the S&P 500. It's not abnormal, right? It's not abnormal. You get this. And I was looking back here. I mean, this was a 14% drop in the NASDAQ. This one was probably around 10. So it's not like we haven't seen this before post-March, right? I mean, we've seen two other instances where tech had one of these downturns. And look what happened. The trend eventually continued. It's not like we haven't seen this movie before.
Well, and we also haven't even seen Apple or Microsoft even get anywhere close to the 200-day moving average and really seeing major support test here. So I think it's premature to dance on the grave of good old technology and Amazon and Apple and all of those stocks out there. But when you're looking at the strength of the market here today, obviously that's in energy. Energy has been and continues to be one of the best performing sectors out there with a lot of positive mentality towards energy. And energy had one of those moments here today where there was a potential landmine that could have stopped a lot of this momentum called OPEC and Saudi Arabia. And, they passed that test. Saudi Arabia comes down. They made the announcement that Saudi Arabia is going to agree to continue their 1 million barrel a day cut. That's obviously a bullish catalyst. But it wasn't just that. As oil, if you go to oil very quickly, whenever oil gets into the 60, 65, 70 area, you know what Russia's going to do. They do it every single time. They open up the floodgates and they start liquidating the marketplace. That's Vladimir Putin 101. That's what he does all the time. But at least for a month, OPEC and non-OPEC producing countries have agreed to not increase the supply of oil. And there was some speculation that increase was going to be about 500,000 barrels. They're not going to do that. So a little bit of a double whammy approach here on oil with the positive response out of oil. Energy is going to respond there as well. And I look at the energy sector here today, and if we kind of go back to XLE, this is a breakout here for me today. I think you got to call this a breakout in energy. It violated the previous resistance. You're most likely going to close above that. Obviously, the intraday got caught up in the market selling in the last 45 minutes. But as long as you close above that previous resistance channel, you're going to see that as a breakout. And even though you do got a little bit of a negative momentum happening in technology right now, and specifically discretionary in technology, they are just completely out of favor right now. And you don't want to catch that falling knife, guys. Let it find support, let it hit the floor, and then we can look at discretionary. We can look at great names in discretionary. We can look at great names in technology. These are going to be two areas of the market that are going to be a faster viable candidate than a lot of people think out there, in my opinion. Let the bloodbath happen. Stay away. Don't touch that stove when it's hot, and let the knife fall. Let it happen. Don't be the individual that says, I want to be the tick that ends this bottom here. You don't want to be that dude. You don't want to play that game. Go where the money's going, and the money is flowing into energy. And when you look at some of those energy stocks out there today, look at ConocoPhillips, COP. Isn't that a breakout of 55?
It's a beautiful breakout.
With momentum behind in the trend?
Mm-hmm.
Yep.
Okay, look at CVX. Same type of concept?
Yep.
Okay, what about HFC? What about MPC? Okay, high base potential trigger, real good high base potential trigger there. We talked about Valero yesterday, right? Valero getting caught up in a little bit of the pain here today. Remember, Valero's a refinery; it's not a drill baby driller, but still pretty decent trend, good momentum behind the trend, and I still like the potential trigger above 80. So in energy here today, really kind of bucking the move in the marketplace. Real good trend, real good pattern, real good stocks setting up for potential breakouts in energy. Take a look at industrial here. Another area of the market that has done really good, an area of the market that we upgraded coming into taco trading this week, whereas the rest of the market is bloodbath. What do we do with industrials? Setting up really, really nice. Now take a look at some of those individual components. Let's take a look at Caterpillar for a second. Who's not interested in this flag-based pattern off momentum in Caterpillar?
You have to be. I mean, that's the thing, is that you're getting some of these retracements on some of the higher flyers that were beautiful and just taken off. So you have to be interested in patterns like this. Caterpillar is one that grabbed my attention this morning as well, Matt.
Okay, what about, let's take a look at John Deere. And yes, we're still going to say John. Who's not getting interested in that pullback there? Right, you just now these two, you're just kind of now waiting for them to confirm more than anything else. What about let's take a look at EMR and JCI. High base potential breakout. What about JCI?
Yeah. Time, but strong, right?
Yeah, just really strong. Take a look, and let's take a look at finance very quickly, just in general. And so finance still hovering in a high base type breakout with momentum behind it. Obviously hasn't confirmed like energy here today, but you're not seeing the all the headlines, right? I'm a consumer here too, guys. We're all consuming the same headlines, and the headlines make you think the world is ending to a certain extent. They do. But then when you look at the cyclical areas of the market where most of the money has been going into over the course of the last 3 months, there's no concern here, guys. And if there is, it's because somebody's ducking their head in the sand and not looking at what is actually transpiring here. And then the one sector that is just really confusing to me to a certain extent is comms, communications. When you take a look at communications, if there's a sector in the market that should be looking like discretionary and like technology, it's communications. And comms is holding up really, really nicely. Look at news, look at Fox. Look at Comcast. Look at Viacom. Let's take a look at CMCSA. Potential breakout after the breakout, snapback, retest, Cody special, now threatening that secondary breakout. That is strength in that chart, guys.
Yeah.
That's what that is. What about NWSA? That's turning into a consolidation cup and handle pattern with a potential breakout and a new leg coming. It's not, my point is, it's not broad-based. This is sector-based. This is sector-based. Let's see what the market does with support. Obviously, support tests are going to be very important here. But this, to me, is not a repeat of an entire market that is getting skittish about something.